There are only two resources that you need to start investing as of today. Yes, only two, both of which are free. So I don't know why you wouldn't start today. There are a bunch of YouTubers out there that'll teach you how to place complicated trades, how to day trade especially, and how to read complicated graphs and data, but they won't dumb things down for you. Well, if that's you, you're in the right place. My name is Jay Patel, and this is The Learning Ledger, episode 4. So far, I've only actually taught you why investing is important and how to save money, but I haven't taught you how to actually read graphs and how to read company data to make those big decisions to start investing. Well, that's exactly what I'll be doing in this video, so please stay with me throughout the end of the video to learn all the tips and tricks. In this video, I will be using only two resources. One is Yahoo Finance, which is completely free, and two is actually just Google. I'll be searching up the company name to just get more information on them, look at the hot topics, whether they've been in the news lately or not. And that's it. Those are the only two things that I use to actually place my trade with confidence. My goal with this video is to teach you how to read graphs and how to read company data and give you enough confidence that you are able to start trading as soon as market opens on Monday morning. Alrighty, so I have Yahoo Finance pulled up. Before I get into actually researching the stock of the day, I just want to say that Yahoo Finance is great. They have everything that you need to boost your confidence to start investing. They have the graphs, they have the numbers, they have news, and so everything is in one place. I love it. Go ahead and make you an account and go ahead and get you the app too. That being said, today's company we're going to be searching up, for example, for today's video is Meta. Meta is actually the parent company of WhatsApp, Facebook, Instagram, Threads. They trade under the ticker META, which is Meta. They've last been traded at the price of $658.76. That was their closing. And now that we have all the basics out of the way, because we are long-term investors, we are going to go directly to one why. We want to see the yearly return, right, which is 3.51%. Now, that number tells me that they lagged behind the S&P 500. They lagged behind the general market. And so that tells me that this might be an investment opportunity right here. They might be selling at a discount, and that's why they're lagging behind. Now, it can be the complete opposite story, but let's look at it, right? So let's analyze this. So we know that, if I turn this off and turn it back on, that's the key events. So let's look at the key events. What are they? We've got the EPS, we've got the EPS, we've got the EPS, and the EPS. Okay, so the blue dots are the EPS. Okay, so they, in January of 2025, they beat earnings significantly by almost 19%. Stock boomed. I like to see that. There was a drop here. What was that drop for? Well, okay. I'm familiar with the market. You might have to do your research. I know that in April, everything was down. The market had essentially collapsed, and so that's why Meta doing this is not any worrisome. But that's how. But if it was you, you would have to do your due diligence. You would have to search it up. You'd have to see why there was this drop right here. Okay, let's see. There's their earnings in April. Okay, so they beat them. They beat earnings by 23%. Now you might be wondering, what is earnings? EPS is earnings per share. I'm going to throw the definition in the video for you to read over. Okay, so they beat earnings here, and the stock, look at this growth over time. And then they beat earnings here, and then the stock just kept growing. Okay, well, there's another dip. Why? Because they missed earnings significantly. They missed it by 84%. Now, I am, again, familiar with Meta. I know why this 84% drop is there. It's because they had a one-time tax hit of $15 billion, and that's why their earnings dropped so much. And on top of that, Meta announced that they're heavily spending on AI. And so the market didn't take it well. But again, you would have to do your due diligence. The reason why I'm showing you this is because so you can go back and research it, right? If you see this dip, that's what you want to look for. You go search it up. You say, hey, You search it up in Google. You say, why was there a dip in Meta in April? Why was there a dip in Meta in November? You search it up. That's what you do after you read the graph. You want to do two things when you're looking at these graphs. You want to look at one, has the company overall been growing? We're not worried about 1 month, 5 months, 1 day, right? Overall, 5 years, has this company been growing? All time, has this company been growing? 1 year, has this company been growing? That is what we want to look for. If your answer is yes, you continue to ask yourself the next thing, right? Which is, can they recover from dips? I can see just from this that Meta is really good at recovering from dips, meaning they have good buyers even in bad times, right? April took a big hit, and then boom, in May they started those buyers started coming in because they see this positive confidence from the company, and they started buying heavily, right? Company reports bad earnings, investors start selling. Okay, they reach this low point right here, and then investors are like, you know what, this is a discount buy, we're going to start buying again. So Meta has those buyers, which is what we want to look for, because we not only do we want to make profits, but in times of desperate markets, we want to be able to make sure that whenever the market recovers, my personal stock also recovers. Now, you can see all time there's a dip right here as well, and I'm assuming this dip had something to do with COVID, maybe around that time. Not really sure why this dip exists, but again, I'm not too worried about it if the generally stock is doing this. Okay, so we like this stock. Graph tells me everything I need to know. The next step I go into is this little bracket right here. This bracket will essentially give you everything that you need to know whether you want to invest in the stock or not. You start with this right here. This is the most important in this on this page. Essentially, it tells you the market cap. Now, the market cap, you want it to be greater than $10 billion. If it is any less than $10 billion, go ahead and start researching another stock. We do not want to deal with penny stocks. We do not want to deal with very volatile stocks. $1.66 trillion, that is that's a healthy number. I know that there is a bunch of big companies supporting this. There's a big buyers in this, such as Vanguard, BlackRock, and whatnot. So I know this company is safe. We can put a check right next to it. The beta is basically the company's risk compared to the market risk. So how volatile is it compared to the market? 1.29 means it is more volatile than the average market. 1 on the dot means it is as risky as the company, and then less than 1 means that it is less riskier than the market. Does this worry me too much? Not really, because Meta's competition, the tech sector, is around this right now. Because of, again, high spendings, high expenses, and whatnot. So their beta 1.29 completely makes sense to me. Now, the PE ratio. This is very, very important. Now, the PE ratio, the way I like to do it is I like to put it in 3 sections. If it is between 15 and 20 or 22, I like to think that it is selling at a discount, meaning that there's potential for growth and we should buy. 22 to 30 tells me that it is average. That's what the average is in the sector. Now, again, you want to look at the sector. I know tech sector around that is pretty average. And then anything above 30, it basically means that the investors, the stockholders, see that as an opportunity that the company will grow. They're indicating that the company will grow. So 29 is a good place to be. We like to see that. This tells me that the company has potential to grow. Again, 29 is less than some of its competition, so it tells me that it is selling at a discount and it might be time to enter into the position, right? EPS, again, 22.60. That's earnings per share. We'll get into that in a minute because that's at the very bottom. It's earnings per share doesn't really tell us anything compared to the market because each company has a different EPS, but we can compare the earnings per share trend within the company. We can see if they're positive, if they're negative. If they are negative, are they working their way up to the positives, which is what we want to look at. Now, earnings date, that's important, January 28th. That's coming up here in a few days for Meta. So that's something that we're going to be watching. That's something that we're going to hop on the conference call with and see what they have to say. That tells me whether I want to hold the stock long term or sell it. Dividends, I'm not too worried about getting into this video right now. I will be making a whole separate video when it comes to dividends and how you can actually make that a passive income. 1 year target estimate, that is something I also look into. A target estimate is basically what the Wall Street analysts are expecting this company to be at a year from now. So they're expecting the price target at $831.93. Currently, it is trading at $658. So there is a significant possibility of an increase. We like to see that. Now, one thing that I do want to make sure that you know is that these analysts are not always accurate, so don't just base it off of analyst ratings. Goldman Sachs can come out and say that, okay, we think that the stock's going to hit $1,000 by the end of the year. That is not always the case. Again, you have to do your due diligence in the stock market. So you come down to this performance overview. It tells you, okay, 1 year Meta has performed 3.83%. Compared that to the broader market, S&P 500 has actually done 13.2%. So it has lagged behind. 3 years, okay, it's done much better than the S&P. And then 5 years, again, it's done much better than the S&P 500. So this actually doesn't worry me, the 1 year return. It actually tells me that, okay, the stock might be selling at a discount. It might be time to go in now. That is how I am reading this data. Here's the earnings trend that I was talking about from earlier. We have a EPS beat, we have an EPS beat, we have an EPS beat, and then this significant drop. Again, this is with that $15 billion one-time tax, and then their earnings coming up. So this trend kind of tells me, you know what, Meta consecutively beats earnings. There's nothing to be worried about there. That means they have positive cash flows. Again, you can see their revenue is holding up. They're doing good revenue. Their earnings are increasing, right? Now here, not so much, $2.71 billion. Again, they paid $15 billion in tax, so this makes sense. Nothing to be worried about there. And then the very last thing I look at is the analyst recommendations. Like I said, that it is not always accurate, but if so many analysts are out there saying that it is a strong buy, such as Vanguard, BlackRock, right, JP Morgan, Bank of America, right? These companies that manage billions and billions of dollars in assets are coming out and saying that, okay, this is a buy, this is an outperform, overweight. Then I need to consider their opinion in it as well, because they have professionals that put these price targets. Again, don't base your confidence just into this. Do your due diligence, but this is an excellent thing that you can refer to, the top analysts, what they're saying. So overall, it looks like they're telling me that this is a strong buy. Even the price target of $840, I believe, is telling me that it's a strong buy. The graphs are telling me it's a strong buy, and so is the EPS, the PE ratio, and the beta. So overall, I think Meta is a buy, and that is exactly how I walk through it when I start investing, when I'm researching, and this is how you need to do it. You need to start with the graph. You need to work your way down to this little bracket. You need to go all the way down, read the performance overview, read the revenues versus earnings, look at the EPS trend, and then look at the analyst recommendations. And then your very last step, easiest step you could be taking possibly, you're going to search up Meta stock onto the Google, the search bar, and you're going to read what they have to say, what the market has to say, what people have to say about Meta, right? So let's see, is it negative or positive? Quickly, briefly read through this. Meta stock is trading at a stark discount. Okay, so that's good. We like to see that. Meta is positioning itself as an AI structured giant. Okay, we like to see that. Meta's reporting next week. Okay, so we want to be careful about that. Meta. Okay, so Jeffries is saying to buy the pullback. Again, all I'm seeing is excellent news about Meta. My last decision is to buy Meta. I am going to buy some Meta stock. All right, guys, that will be it for the video. I appreciate y'all staying throughout the video for me. Now that you have learned how to read graphs and actually, interpret those company financials, go out and put it into actions. Me teaching you all of this will not mean anything until you actually go out and put a trade in, actually learn from your mistakes, right? So again, remember my lessons. Stay away from penny stocks, stay away from any stock that's smaller than $10 billion in market cap. You wanna stay away from day trading. We're long-term investors. We wanna see those big pictures. Again, trading and investing is much easier when it's not day trading, because you don't have to actually understand the complex highs and lows. You don't have to actually know how to read the candles, the dips and the highs. You just need to look at the broad market. You got to be able to read the news, read some of the company financials, and that is it. So I appreciate y'all staying with me. My name is Jay Patel, and this is The Learning Legend.